The market is crashing. Housing is going to zero. It is the bubble of a lifetime. And what are you going to do about it? Oh, wait a second. Maybe it's not. Maybe we should stop listening to those idiots who've been talking us out of investing for the past 5 years plus, while we've missed a huge bull run. So if you listen to these guys on YouTube who are constantly talking about a housing bubble, a stock market crash, and everything else, and they've kept you on the sidelines, blaming your boss, blaming the world, talking about how things are overpriced, maybe it's time you start making your own decisions and decide to start investing and saving for the future. I don't know, just seems like the better way to go. Anyway, stick around, this should be a good video today. Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K. Ugh, I don't even know my name. I'm so dumb. Which is why you shouldn't listen to me or any other YouTuber on YouTube. I'm just saying. I'll get to my disclosure later. Anyway, I hope everybody's doing well. I hope everybody's enjoying their weekend. I had a really nice weekend. One of my son's friends came over one night. We actually had a couple of drinks, and I rarely drink, so that was kind of fun. I made the beef ribs again, which came out a little bit tough. I'm not thrilled about that. So, why am I talking about this stuff? Well, Saturdays and Sundays give me time to do a little research, watch some of the YouTubes, and see what's going on. And the algorithm must have picked up some negativity because I started getting some videos talking about the housing market crash, the stock market crash, and all of these things that I don't want to dismiss completely because historically, the markets are a little overpriced. Things are going on. There are some signs of a bubble, but I want to go back to 2008. For those of you who are old like me and go back to 2000 and the dot-com bubble and talk a little about both of them and the differences I see. So let's start earlier. We'll start with the dot-com bubble. When we really got into the top of the bubble, there were four, maybe five IPOs every day for months on end coming out that were .com sites. Like they were basically just anything that was a website, but it was so new to the industry. People were so engaged in it, including myself. I don't want to make it sound like I didn't get caught up in it because I did. But the IPOs would come out, and whichever one CNBC was focusing on would just shoot through the roof, and they would get essentially what I consider marketing to make it go up and up and up before the rug came out and it all fell. But these companies had no earnings. They were just a idea, and they were going public and getting on TV and getting recognition. Now, I don't want to pick on Figma because I know nothing about what they do. And to be honest, if I even read it, I know it would be above my head. So I see things similar in tiny little aspects where when Figma came out and it shot right up, like to me, that is bubblicious, if you want to use that as a word. But it gives a bit of a sign, but it is nowhere close to what was going on in 2000. I mean, you would go to, now I lived in Chicago back then, and I was in downtown. So a lot of my friends lived in high rises, and we would take cabs to go to each other's house because you didn't have Uber and Lyft and those things around. When you would go over to your friend's place, you'd get in the cab driver would be talking about some .com stock that they had bought that had gone up a whole ton. You'd get to their place, you'd walk inside, and while they were buzzing up to call your buddy, the guy at the front desk would start talking about their .com. I mean, it was infectious. I don't see any of those things going on right now. If anything, people are struggling and they're not being able to invest in things. And while prices continue higher, they're just watching from the sidelines because they need to spend their money on things like food and rent and utilities and just living. You don't have the same phenomenon going on right now. Now, let's talk about the housing market a little bit and the differences going on. So, if you go back to 2008, or even let's go back to 2006, where the prices started going up. See, my hand's moving down here. Nobody really sees it, but I talk with my hands. So, there were these newfangled loans called the option arm. It gave an ability to get into a house with a really small payment. How? Because they offered four different options for making payments. It wasn't a bad product. It got used really poorly. Since then, now it's not even legal to be able to use. So, here were your four options. One, you can make the equivalent of a 15-year option, like a mortgage payment. So your payment would be the highest of the four options. Two, you can make a normal 30-year payment as an option. Three, you could make just an interest only payment. And four, you could make the smallest payment, which is actually what's called negatively amortized. Now, what that means is you're actually adding equity, or you're actually taking equity away from the house. So, meaning you owe more money month over month onto the principal balance. What is this intended for? Well, it's typically used by an investor who's buying a house, wants to keep the payment as little as possible. So they make the smallest payment. They don't mind that they're adding on to their debt because they plan to flip the home in a short amount of time and make a profit based on the flip, not on how much they owe on the loan that they're taking. What ended up happening is this got used and sold to everybody. I actually originally started getting into the mortgage business at the time, and I was getting in a fight with the guy who was teaching about it. And I'm not saying this with any, but they were trying to tell you to go home and talk to your parents, and like they were just selling it. And I raised my hand. I'm like, look, this is a bad option. I wouldn't put my mom into that type of loan. If she makes the minimum payment and owes more money on her house as opposed to making the regular payments, she could end up in a really bad position if housing corrects. Now, I did not see this huge correction coming. I don't want it heard the wrong way. But the response was housing never goes down. I'm like, well, it does go down sometimes. Again, I didn't expect to see the 2008 happen the way it did, but I recognized that there was fluff in the market and these loans were part of the problem. The other thing is you could even borrow for the down payment end of it. So you would have a first and a second. You've walked in putting no money down, and you didn't have to show assets or incomes. You could do what was stated assets and income. So this was just a total, like, it's not a surprise looking back that the market imploded on itself. You had lots of people who couldn't really afford the homes, but they could afford the minimum payments with this promise of housing just always go up. So the worst that happens is you just refinance down the road. And if you haven't watched the movie The Big Short, well, it doesn't really get into the weeds and the details of it. It does a great job of explaining some of it. Like, they were bad loans being sold as good loan paper, and then it got sold on Wall Street, who just had an appetite to buy more and more of it, and everything just imploded basically because of these loans that drove the market higher and higher because people were just buying houses that they didn't have money to really afford. Fast forward to today, and that is way different. People have very low interest rate mortgages. They have the normal traditional 30-year loan. And even the people that got in kind of late that have the higher loans in the sevens, they qualified. They put money down. They had good credit scores. And they made enough income to be able to afford the purchases. Maybe pricing softens. Maybe we have a small correction, but you're not going to run into a situation where all the equity is dried up. The payments are going through the roof and people are just going to go rushing to the door in the same way. Because again, go back to 2008, you start the correction on the price and you have somebody who's put no money down and they start to be upside down versus how much the house is worth versus what they owe on it. And then it starts to get worse. Why would they stay in that home? So you have a situation where people started walking away from the homes because they could go pick something up for cheaper and they had no skin in the game. If you look at today, the payments are low. People have equity in the homes. They're talking about the foreclosure rate shooting through the roof. Well, that's based off of historically low foreclosures because there weren't any. For the most part, people aren't going to foreclose. They have equity. They're just going to sell. That isn't the same thing. If they need to get out because they feel stretched, it's way different today. And I just don't see a big housing market crash. Now, keep in mind, like always, this is not financial advice. You need to do your own research when making financial decisions. If it's equities, maybe you should be reaching out to a financial advisor. If you're looking at properties, maybe your lawyer or your accountant or whoever you confide in to make these decisions. But you have to do what fits your life and makes the things right for you, not listen to me or anybody else on YouTube. It's just when I see like Orlando Miner, who's been talking about a collapse for the past 5 years. I mean, he started talking about it, I think, in 2020. If you stayed on the sidelines listening to somebody like that because you just think the world is terrible and we're going to have a big collapse, the equity market and the housing market has had a tremendous run on top of the interest rates going significantly higher in that time frame as well. And you've missed out on great opportunity. I am not saying the future will do the same as what it was for the past 5 years, but I think listening to these people and not making the right decisions for yourself is probably a major mistake. If you're looking at buying a home, look at something you can really afford. And if it's the home that you're going to live in, my suggestion, and really this is just my thought process, the home that you live in shouldn't be looked at as an investment. If anything, it's almost a liability because it has expenses that goes with it. It gives you a place to live so you can avoid paying rent, but it shouldn't be based on I think the house is going to be worth more. I think kind of backwards in this. Like if you are starting out and you're buying a home to live in because you want to own and you don't want to rent. First of all, it should be based on you like the location, you have friends in the area, maybe you like the schools and things like that, and it is a place that you're okay living in. And again, now you don't have to rent. It also is the love of ownership. If you want to start buying your own new appliances or repainting or making it look the way you like. Again, these are expenses, these aren't assets. You can do that stuff simply because of the love of the home. Maybe you have a family that you're starting. But if you're hoping to buy a bigger home down the road, you actually want housing prices to go down. They tend to move similarly in the same areas, and if it drops the same percentage, let's do both of the math so you understand what I'm saying. Let's say we start out with a starter home and it's $300,000 home, and house prices double. Oh my God, your $300,000 home is now a $600,000 home. That's amazing, right? Super excited about it. But one day you wanted to buy a home and the ones you really liked were around $800,000. Well, that house has also doubled and gone from 800,000 to 1.6 million. And as opposed to being $500,000 away from where you purchased before, it's now $1 million away because both homes have doubled. Now, let's use the same scenario and say that housing fell in half. Now, the funny thing is the houses that are starter homes on the smaller spectrum may not fall quite the same percentage, but let's pretend for a moment it does. Your $300,000 home falls to 150,000. Oh my God, it's terrible. Now, if you can afford the mortgage and you still like the home, my suggestion is you still like the home. Like, what's changed? You shouldn't be paying attention to it if it's a house you live in. That same $800,000 home that you really liked has now fallen to $400,000. And it is much more attainable than it was if housing would have doubled. So if you're talking about your primary residence, you actually probably don't want to see housing prices continue to go higher. If you are looking at investment properties, it is a totally different math equation. But listening to these guys and making bad decisions for your life, for your family, blaming the world for problems and talking about how everything is too unaffordable, as opposed to just saving and putting away and trying to put yourself in a better position no matter what, like it's noise. You need to stop listening to all the negative. You really do. You need to be optimistic and positive and work on going in the right direction no matter what's going on in the rest of the world. If I like, I don't remember the exact number, but if you look at the unemployment rate in the Great Depression, there was still a lot of people still working. I do see some kinks in the armor. Employment is people are losing jobs in Las Vegas. Things are slowing down. The interesting thing is when I look at the stocks are holding up and doing quite well, which makes me wonder about who we're losing as visitors. And when I talk to friends who work at the local casinos, things haven't really changed a whole lot. And they're like, well, it's always the same here. Yeah, but if the economy was really doing terribly, it wouldn't be the same there as well. The other thing is we've had a big uptick in inventory in the real estate market. I haven't seen prices fall off. And not only that, it seems like buyers are beginning to come back into the market. And I kind of wonder if that's because there's more choices at this point. It doesn't seem to be driving prices down, causing a big crash like some of the people are talking in the videos. It doesn't seem to be driving the stock prices of the casinos down, which makes me wonder about maybe they lost the customers that they weren't profiting on and they're doing just fine and they're able to slim down and trim costs with letting people go, which is unfortunate, and everything else on that end. But it seems like earnings are doing okay. You then take into the fact this big exodus that the news talks about. And I got to tell you, we still have tons of people who move here from California and Hawaii, which have much higher housing prices. So I think when they come here, they still think we're rather inexpensive. The prices are holding just fine. There's more to search through and more inventory. So I think the buyers are coming out. I've actually seen things start to pick up and the market look what I would call normal. It doesn't have this huge, like, everybody overpaying and going nuts, and it doesn't have this huge exodus where sales are getting terrible. It seems like we're getting some buyers and they're able to negotiate. Maybe they get some concessions and houses are still moving. Yes, you have those people who list at exorbitantly high prices and think their homes are worth way more than they really are. And it makes good videos. Jerry Abbott does, I think it's Abbott, does some great videos on it. But if it's fair and you watch his videos, he doesn't see any big crash. He's just saying, just like I talked about with stocks and everybody else, do your research, like pay attention. Don't fall in love with some home that's completely overpriced just because somebody puts the price tag on it. Doesn't mean it's necessarily worth it. You need to do your research of the values of the home. That doesn't stop people from listing too expensive, causing the house to sit on the market, make it look like the housing market is crashing because certain individuals have to lower their price point multiple times. That's just called an owner who's over optimistic about the value of the home. I mean, he has some great examples. One last week, not the one this week, of somebody who bought a home for like $400,000 and was listing it, I think, for almost $1.5 million in a neighborhood where the most expensive home in the neighborhood was around five, maybe $600,000. Well, I'm sorry, even if you've done a bunch of upgrades, you're just not going to do that. You're not going to drive that type of buyer into that neighborhood when the house just isn't worth it. And you're sure not going to do it from some upgrades that you did over the past 6 months or a year, unless you've put in unbelievably incredible fixtures and furnishings and things that really would add value to a home. It just doesn't work like that. So, yes, you have some people who are unrealistic and do some silly things, but that doesn't mean the house market is collapsing simply because then they have to lower their prices to a reasonable level to actually get people to look at the home. Those are two totally separate issues. The interesting thing is, I'm watching the Fed get in the position where they're probably going to cut in September. Unlike last time when they cut, I don't see mortgage rates spiking. I do think the economy is slowing a bit. There have been some huge slowdowns in some other countries. I think the tariffs are making it more difficult. There's been slowdowns at the docks, from what I understand, and the imports are slowing down. So if the economy is slowing, you're not going to see the end curve of the yield just spike simply because it's going to be inflationary. What I really think is now's the right time, that it's finally slowed the right amount where the Fed's going to be able to cut the short end. You're going to see the long end kind of drift lower, but not as fast, to stay normalized. And you're going to see things get back to normal, more like an air coming out of the balloon. Now, if we see prices decrease, it's simply because the margins are too big at some places. But you're also going to see the big take over the small, and companies like Amazon, I think they continue to do well. And the small companies might struggle because their costs are still high and they can't get the margins they need. But when you're doing the volume that the big companies do, well, they're able to still move product. I just don't picture Amazon losing a ton of business over the next couple of years. I think things are okay. I mean, what do you guys think? Do you see the economy collapsing? I know nobody likes the higher prices, but when I go out to restaurants, the ones that are good are still crowded. The ones that are not good and just overpriced, well, they're not so crowded like they were 2 years ago because you had to go everywhere. What I'm hoping to see is that the good restaurants start getting better service. They're able to manage the clients because they're not bombarded with business, and things normalize in that sense too, so that you're not always going out and being disappointed with the service, the price, the food, and I hope that goes through all industry. Now, if you're paying attention to the real estate end of what I've been talking about, keep in mind real estate is very localized. While as a country we tend to ebb and flow together, what happens in Las Vegas is not going to be the same as what happens somewhere else. I'm not in tune close enough to know what's going on with Florida, but I know they had a lot of Florida specific things going on that could create some good opportunities there. Could be some bad opportunities, so forgive me. The other thing is to make a point on the comments in the comment section. People get really uptight and, oh, it's the greedy owners and blah blah blah. I'm sorry. The buyers and the owners are just as greedy. The buyers want the cheapest price possible, and the sellers want the highest price possible. I think greedy is being used as a negative connotation, and the reality is that's just wanting the best deal no matter which side you're on. When COVID first happened, all the comments, people were so excited, they were hoping that the sellers would do terrible and the prices would drop and they'd be able to have a great opportunity on the buy end. Is that not greedy? Is that any different from wanting the highest priced on the sell side? And I think this comment of the greedy sellers is just some jealous people who don't have a property. I'm not trying to be tough on them, but it has nothing to do with greed. People who sell want to sell for the breast for the best price they can. And people who want to buy for the best price they can. There is no difference in that. Neither one is more greedy. And there's nothing wrong with people who want to be a landlord and rent out their properties, because there's always situations where not everybody should own. Not everybody is in the position to own. Not everybody can afford to own. So they need places to rent. The market is the market, and if somebody comes in and fulfills that need, that is how things work. It's hard to point fingers and call one more greedy or one worse than the other simply because they stay financially smart, whatever you want to call it. Maybe that's not the right word. I heard somebody once talking about pensions and what's fair and what's not fair. And they were talking about the story they gave was it's two brothers, one who's financially responsible and one who isn't. Does the one who's financially responsible not deserve to get what they've earned by being in I think it was fire department they were talking about, simply because they've saved and they have a good amount of money versus the one who spent all their money and really needs that pension coming in? People do different things. And if you gave money out equally to everybody, you would have certain people who save their money and build a portfolio and end up in a good position. And you would have people who would spend the money and end up in debt and don't end up in a good position. So blaming the other guy for doing the thing that you should have done as well isn't the right way to go. It's why I constantly say just get yourself in the right position, continue to save, put away for your future. I don't care if it's $1, $10, $100, $1,000. Do the best you can to put yourself in a situation where you end up where you can rely on yourself and you don't have to rely on Social Security or other programs. I did, however, see one doom and gloomer who actually talked about a product that I like as well, but kind of for different reasons. And he made this outlandish prediction that the funny thing is, the same thing has gone through my head. Now, I might be really wrong on this, but understand it is not a pick because I'm doom and gloom. I just think it's been undervalued for so long and it's lagged that market for such a long time that it's going to get caught up. And the one is silver. I think silver is going to trade $100 an ounce. Now, I know that sounds ridiculous, and I know it's already moved a decent amount already. But when you look at gold and what it's done, and the fact that silver has just been ignored, I think what you're going to find is people are going to start buying silver because they can afford to buy it, and gold is getting expensive enough, and people aren't going to want to buy 1 ounce for $3,500 when they can get 70 or 80 ounces of silver for the same price, which I think will push the price higher. The interesting thing and what I kind of like about it is I think that happens whether the economy is good or bad. Um, I am not a silver bug or a gold bug, so I want to give that disclaimer as well. But what I like about the trade is I think if the economy does well, I still kind of see silver going to 100. I think it's going to get drawn to that. And if things turn for the worse and people do a flight to what they consider safe, which I don't think it is, it's what's kind of funny about all that stuff. But I think they'll fly to metals. And I think same thing. I think they're going to push to something like silver because they can buy it for $40 an ounce still. And I think that pushes it higher and higher. And it's lagged for so long. Like, forgive me, I watched these markets over 30 years for the most part. I remember when gold spiked to, geez, what was it, like $800 an ounce back in the 70s when I was a little kid before it fell to under 300, before it went to the 3,500 that it's at today. Well, after the Hunt brothers, and I wasn't alive back then, or at least I wasn't paying the markets. I'd have to look at when it happened, but I think that was a long time ago. But after that happened and silver spikes, silver's been like left for dead, and it never really does anything. The thing is these metal bugs and people who think the dollar has no value and whatever else, like they still do gravitate to this stuff. And again, I think what's going to end up happening since gold has gotten as expensive as it has, they'll probably start pushing silver just because that's what they'll start buying because they can afford to buy a decent amount. I thought it was interesting that he picked silver, and I thought it was interesting that he thought it was going to $100 an ounce as well. I think if enough people start thinking it, they will cause it to happen. So I kind of like silver as an investment because I think it covers you no matter which way the economy goes. Again, that's a tough one for me to give because I don't want to commit to it too much. I'm curious what you guys think. Is it a market that you watch? Do you kind of feel the same way? I also think like we've had so much inflation that when I think of like a silver coin, it wouldn't shock me if it's $100 for an ounce because $100 isn't all that much money anymore. And an ounce of silver is kind of cool if you want one. Let me know. Again, I'm curious what you guys think. That is definitely not like my United Health that I think is the best deal on the market. I'm not pounding my hands on the table for this one. It's just a thought that I had. So when I was listening to the gloom and doomer and he was talking about it, I kind of had this light bulb of, it's kind of funny. While I disagree with an awful lot of things he was talking about, I have had the same thought on silver that he has. So I'm kind of curious how many other people think the same way. And again, I still think United Health, even at $315 a share, is probably the best deal on the market right now. I'm sure there are other ones that I'm unaware of. I still like the Magnificent Six, as I said about, and I hate to admit, I'd probably add Tesla in there as overpriced as it is. I was listening to somebody else talk about how Tesla's been overpriced for 5 years, and if it's lasted 5 years and the market hasn't corrected it, that it means it's not overpriced. Well, I'm going to say I disagree with that a little bit. I think Tesla is significantly overpriced. People are making bets on robo taxis and robots. Maybe it comes to fruition and the stock becomes worth a lot more, but I don't like betting on hopes of the future. And the only thing I really like about Tesla right now is the incentive program that they offered Elon Musk, and I would hope it would pass for shareholders because if that gets him to S or get off the pot and actually prove that he can drive as many vehicles as he promises, I don't mean literally drive. Um, no pun. No pun was intended, even though I think that was a pretty funny pun. Um, but if he can get the robots out the door, if he can get the subscriptions for RoboTaxi, if he can really drive the revenues, and these are $1 trillion ends to the business, that's great. But if they're just promises by, Barnum and Bailey of what is to come, yeah, it's kind of a waste of time. I see it no different than a penny stock or anything else that you're way overpaying for in the hope of it becoming something that it currently isn't. And again, like maybe that's a gamble somebody wants to take, but I would price them closer to like a 30 PE, which would drive that price down to, maybe $120 a share. I don't think I'll see it. I don't. I don't expect it to go there. But I do think that's a more reasonable valuation, which is still high for the auto industry. In terms of their actual earnings and the amount of cars they sell, and the fact that they're actually slowing down, other than what I expect to see for the last quarter because of the incentive going away, it's a car company and PEs should be significantly lower. I understand giving Tesla a better one because there's more promise there, but having it where it is just seems way too expensive to me. I just think that incentive program could actually push it, and he could actually, like, he's done amazing things in the past. If this actually gets him motivated to really push those things along and do it in a reasonable time frame, maybe it's possible. Um, but I sure wouldn't be making a big bet on it. It kind of goes to my position sizing and the mistake I made in Duolingo. I have no problem with the purchase I made. I like the context and I still like the idea of the company. But when you're buying these things that are just, you think they might be something, the bet should be rather small. And me personally, I got overexcited about Duolingo. I'm kind of kicking myself a little, but it is what it is. Anyway, have a great Sunday. If you haven't already, do me a favor and hit that subscribe button, smash that like button, make some comments in the comment section. I know I bounced around a whole bit today. I'm excited for markets to open tomorrow. I hope we have a green day. But my mind was all over the place because of the videos I had watched in preparation of doing mine today. Have a great day, and I'm sure I'll talk to you this week.